Hello everyone and welcome back to the channel. It's CC Explains here and I'm a qualified accountant currently working as a financial analyst, and today we're talking about one asset that is absolutely exploding right now, and that is gold. Gold isn't just seeing hype, it's seeing history in the making. We're witnessing a record high number in prices, massive institutional demand and global economic conditions that make it arguably the strongest asset of 2025. Forget crypto volatility, this is a fundamental shift. Today I'm breaking down the top 3 evidence-backed reasons why the smart money is pouring into gold right now, why its rally is sustainable, and why we could be looking at a $4,000 price target much sooner than you think. Reason 1. Macro conditions and the US $4,000 whisper. So number 1, gold is hitting historic highs and macro conditions support even more growth. Gold has not only skyrocketed past its previous all-time highs in 2025, but analysts are calling this one of its best performing years in a generation. Might be a bit overkill, but we'll see. Anyway, the core factor is macroeconomic pressure. So what does that entail? Well, firstly, inflation. It remains stubbornly elevated across many global economies. The positive relationship here is clear. Inflation causes money to lose value, meaning you need more currency to buy the same amount of gold, and when inflation goes up, gold prices follow. It's a direct response to currency debasement. Secondly is real interest rates. These are interest rates adjusted for inflation, so when they drop into low or negative territory, cash and bonds give you a negative return. Gold, which pays no interest, suddenly becomes the more attractive store of wealth. And here's the kicker, the analyst targets. Financial institutions are extremely bullish at the moment, and Goldman Sachs released a projection suggesting gold could push towards a US price of $4,000 per ounce by mid-2026. That's a massive move, and it's driven by continued inflation risk and softening currencies. The takeaway? Well, gold isn't rising randomly. It's backed by fundamental technical shifts in global finance. Reason 2, the central bank buying spree. Central banks are buying gold at record levels. This is the part most retail investors miss, but it is critical. Central banks around the world's biggest, most stable institutions, are buying more gold than they have in decades. In the last 2 years, they've added over 1,000 tons of gold per year, and that trend has accelerated heavily into 2025. This isn't short-term trading, this is strategic diversification. They are hedging their national wealth away from reliance on fiat currencies, particularly the US dollar. Why does this matter to you? Because these institutions hold gold for decades. It creates a structural, permanent floor under the price. It reduces the available gold supply, increases long-term demand, and stabilizes the market even during economic downturns. This buying confirms that gold's rally is sustainable, fundamental, and not just speculative noise. By the way, quick point of context, look at countries like China, India, and Turkey. They are aggressively boosting their gold reserves to insulate their economies from global financial turbulence. This demand isn't slowing down. Reason 3. The ultimate safe haven asset. Gold is a proven hedge against inflation, currency risk, and global uncertainty. With geopolitical tensions at a multi-decade high, volatile equity markets, and inflation still biting, gold is performing exactly as a safe haven asset should. Historically, gold has preserved purchasing power for literally centuries. If you look at the price of a tailored suit or a loaf of bread in gold ounces across history, the price is incredibly stable. Meanwhile, fiat currencies lose value. It's built into the system. Gold is the answer to that long-term decay. And during times of market panic and global instability, when investors worldwide rush for cover, they turn to the asset that has survived every crisis for 5,000 years, gold holds or rises when almost everything else falls. This is a non-correlation benefit, making it one of the best defensive and portfolio insurance assets you can possibly own right now. So, if you're looking to diversify your portfolio with an asset that is moving on pure institutional backed fundamentals, then gold needs to be on your radar. If you found this breakdown helpful, please hit that like button, subscribe for more evidence-backed financial analysis, and let me know in the comments, what's your gold price target for the end of 2025? I'll see you in the next video.